This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to this Stock Box special feature on the Aquis Exchange, where we're going to be learning more about the exchange, hearing from the CEO and founder Alasdair Haynes, and asking him some questions. We're really pleased to welcome Alasdair to get a deeper understanding of the Aquis Exchange, its history, why you started it, and the plans for the future. So Alasdair joins me now. A very good day to you, Alasdair. How are you?
Great, thank you very much indeed. Really looking forward to talking to your viewers about what we're doing at Aquis.
Now, there's often a common misunderstanding of the exchange and where it sits in the equities market, and I'm hoping today to bust some of those myths and learn a lot more. Now, the format today is to start with a presentation from you for about 15 minutes, and then after that we've got some questions that we'd like to put to you. So, if I can hand over to you, Alasdair, would you like to start us off with your presentation?
Absolutely. I certainly hope that I can bust some of those myths, and let's get straight on with the presentation then. Well, what is Aquis Exchange and why do we think that we can change both the primary markets and the secondary markets? We're one company, a public company, quoted today on the AIM market, and we run three different divisions. The one which we're most famous for, which we started the company, is Aquis Exchange, and there we trade 1,700 of the top stocks across Europe in 15 different markets. In fact, with the being a subscription model and with a rule that we introduced to the market, which doesn't allow proprietary traders to cross the spread, we actually have the deepest and largest liquidity pool of any exchange in Europe, where we control 23% of all the liquidity at the very best prices. We execute around about 6% of the market in total, and that makes us the seventh largest exchange in Europe today. We also have a technologies business where we license technology to startup exchanges, different asset class exchanges. And of course, today, what I really want to talk to you about is the Aquis Stock Exchange. And the Aquis Stock Exchange, some of you will remember it as the Next Exchange or Plus Markets or ISDX and OFX. And in truth, none of those businesses have actually worked. So why is it today that at Aquis, we can actually do something that is going to be very, very different? Well, what have we got at the moment? We have around about 90 securities in our growth market, representing 18 different sectors. We've already done 12 IPOs. Some of you will remember Samarkand. We did another one last week called NFT Investments. We did another one on Monday. So we've got a very, very strong pipeline. In fact, over 50 companies are coming to us over the next few months. So what are our actual aims? I believe that there is an enormous paradigm shift in the funding of SMEs, not just in the United Kingdom, but actually globally. If you look at the way that equities used to trade and actually be funded in the past, it was very much the image of the post-war baby boomer years of being a privilege to own equities on the London Stock Exchange. Quite often, it was discussed in gentlemen's clubs by men in pinstripe suits. But that paradigm has shifted. Today, we have 3 billion people who communicate digitally. They shop digitally. They game digitally. They listen to music. They watch movies digitally. And they're going to create wealth and trade digitally. If you look at the new online brokers, the average age of people who are trading today is in their mid-20s. The Generation X and the Generation Y, Z, the millennials, these people here will have a different way. And it's all about being a digitalized exchange in a new economy. Aquis is positioning itself to be that digitalized exchange for Europe. Very much in the same way as NASDAQ became the tech exchange in the 90s versus the New York Stock Exchange. Nobody quite knew what to do with these companies when they were coming to market. And everybody was saying at the time, oh, that'll be a boom and bust. And we hear the same things now about e-commerce businesses, cryptocurrencies, tokens, about educational, e-sports businesses, all these things. But actually, when the bust happened in the dot-com in 2000, out of it came great businesses that we know today, the Microsofts, the Googles, the Facebooks, the Amazons. And I believe we're going to see the same thing happen in this digitalized era that we live in today. So what are our strategic aims? To become the NASDAQ of Europe. And in order to do that, we have to connect very carefully to not only institutions, but actually the retail investor. The retail investor plays a critical part in the provision of capital and the secondary trading of SMEs. As I mentioned before, the previous attempts to try and build a business to compete with the national exchanges have all failed, but they've all tried to do the same thing cheaper. And this is not about trying to do something cheaply. This is about trying to do something that is different and is more appropriate and is right for the current market. You cannot build an exchange in the primary market without having depth of liquidity in the secondary market. Liquidity is the lifeblood of a stock exchange. So what have we done to date? Well, the first thing is we've segmented the market. And why do we do that? Well, I think one of the best analogies you can have here is companies are like children. They all start small, they grow, and they mature. And like children, they will need money at certain times during their life. And you're not quite certain when they're going to need to raise money. But if you look at the way we treat our children, we educate them in a primary school. We move them to a secondary school. And ultimately, they move on to university. Each part of that education cycle has a different set of rules, proportionate and appropriate to the child at that age. And the problem we have in the United Kingdom today is that we tend to have a very prescriptive, one-size-fits-all regulation. And as a result, many companies will not look to the public markets to raise capital. We have to get the public back into public markets and to bring proportional regulation and appropriate trading mechanisms for these companies to be able to raise capital at an earlier stage. We all know that companies that have a market cap of, say, 10 million, they trade differently, they act differently to those companies that, say, are a market cap of 250 million, again, which are very different to those companies that have a market cap of 3 or 5 billion. Therefore, it's really important to create an exchange that is rather like the educational process, a primary school, which we call the access market. These are for companies that are coming in, they're learning how to be a public company. It's very different to being a private company, but it can reap very significant benefits. But like primary school, you will move from there once you've reached a level where you can then start to learn in a different way, and you can really start to mature. And that market we call the apex segment. And finally, you move off into your main market, which is the university, which is the Aquis Stock Exchange main market. So what have we done so far, and how are we applying these new sets of rules to these different segments? Well, the first segment, you need an admissions document, the same as you would do if you were going onto the AIM exchange today. You will have probably, friends and family, some family offices, maybe small institutional funding, but it's not going to be massive. And you're not going to have a huge amount of turnover. But you need to know what price discovery and what the price of your shares. So you'll need to have some form of auction process, some form of market making system. As these companies mature, you get into the apex segment. Now, the apex is fundamentally different to any other exchange out there today. For a start, in order to join the apex segment, you have to write a growth prospectus. And I often hear people take a huge deep breath at prospectus. That's going to cost 500,000. It's going to cost a fortune in legal fees and accounting fees. Well, a growth prospectus can template the prospectus, and it's an acceptable prospectus, which needs approval from the UK Listings Authority, the FCA. So it immediately gives you a higher standard than you would get on AIM. That gives investors a comfort, but it does something else. It also allows qualified investors and retail to participate in an IPO. As I said before, the retail participation is absolutely critical because not only is it capital provision, but it also allows for that liquidity in the secondary trading, as the retail investors are much more likely to turn the stock over. So in Apex, you get a higher standard. You get the retail. But as I said before, it is absolutely essential you get secondary liquidity. So what we've done is we've gone back to the older days where market makers were partial owners of stock exchanges. And we have a warrant program for market makers that allows them to buy shares, not in our public company, the Aquis Exchange PLC, but in the Aquis Stock Exchange business. And in return for that, we've asked these 6 market makers who have signed up to make a price no wider than 5% for the retail market in retail size. Now, what happens if you get 6 competing market makers supplying capital with a spread? Spreads narrow dramatically. What's happened when we introduced this on the 4th of January this year, we've seen spreads decline for the apex segment of our market by more than 60% and turnover rise by more than 700%. Now, today in apex, we have 21 stocks with an average market cap of around about 80 million pounds. So these people are getting a higher standard through the listing process. They have retail access in the IPO. They have trading capability and more liquidity in the secondary market. But we do one other thing. We have banned the short selling of these stocks whilst they remain in the apex segment. Now, that is companies today around 80 million, but this could be right up to 750, 800 million before you go onto that university, before you go onto that main market. So it gives these entrepreneurs huge opportunities to be in a safer environment. And why do we ban short selling? Well, we don't ban it for market makers. There must be liquidity provision, but we ban it for everyone else because in these stocks, these companies that quite often for no reason of their own, let's take COVID as an example, and you're in a sector which is maybe retail, maybe entertainment. These companies can get damaged and they get sold short by third parties, not the investors who have the right always to sell their shares, but actually others. And what happens there is good companies, fundamentally sound businesses, their share price collapses. And then what happens is their cost of capital rises, sometimes to the level where they can't raise capital. Their staff leave because all their options are underwater and the company fails. The UK loses a great company. The investor loses out. The entrepreneur fails in their business and probably will never come back to the market again. That isn't good news for anybody. So we are protecting the longer term investor and the issuers under the apex segment. And the final thing is we want relationships with companies. We believe in very, very strongly that the nomad structure that you see today in the AIM market creates some form of Chinese whisper. You cannot speak as an issuer directly to the exchange. And that we think causes all sorts of problems. So when I was talking to a company the other day that's looking to move actually from the London Stock Exchange, their board was asking, well, why would we come to Aquis? Well, a higher standard, retail access, more liquidity through the market maker scheme, a protection through the ban on short selling, and of course, the relationship that you get as a company with the exchange. And all of that as I come from a Scottish family, there's an old Scottish adage out there, which is you can get more for less. And in this case here, not that we push that Aquis is cheaper, but it is roughly 20 to 25% cheaper because it's quicker to come to the market, because it's templated, it's using technology. And these things are the very reasons why we think we can succeed and build this new economy exchange. I want to finish by just looking at a few case studies here. KR1 is an investment company that looks at the investing in blockchain. Now, clearly, you can see here, this is a company that's gone from a few million pounds to around 200 million pounds market cap. We know very well from surveys that we've done with people like ShareSoc that 82% of investors, retail investors, want access to all stocks on any exchange. And investors are missing out on tremendous opportunities that are available actually on the Aquis Stock Exchange today. You can connect. It's been hard to get people to get there, but you can connect today through Barclays, through Jarvis, through AJ Bell, through Interactive Investor. And by getting that connectivity, by getting that capital provision, and by having really outstandingly good stocks invested by retail and institutions, then there are some tremendous opportunities. Tectonic Gold, we look in the mining sector, a tremendous performance there for people who want to actually look and get involved in the mining sector. We've seen Samarkand described really as a sort of hut group, a new hut group, an e-commerce business. We saw one on Monday this week called Semper Fortis, quoted with us, IPO'd with us. Their stock is up more than 200% in the last couple of days. Absolutely available for the retail market. And we have ESG stocks like Salnox. We have a pipeline, as I said, over 50 companies that are looking to come to this market to raise capital. Never has there been a more important time for the UK post-Brexit to have an environment where SMEs, real true growth companies, the digitalized companies of the future, need to raise capital. And they should come to the public markets first and not necessarily go to the private equity or the private markets, which has tend to be the norm. We as an exchange want to change that, and we will change that.
Well, thank you very much, Alasdair, for that. What a great little presentation there, just giving us an insight into the Aquis Exchange. It certainly helped my understanding. And before we go into the questions, I just want to pick up on something you said in the presentation, which was about changing markets. It was quite a strong statement. You said you want to change markets. And two key things I picked up on was you said no short selling and a maximum of 5% spread. So this is obviously very important points for you, really.
They are. We want to be an exchange that differentiates ourselves from anybody else here. And we want to be an exchange that's available for the retail market. And I know from many, many friends of mine who want to invest, one of the things that irritates them is, as a growth market, we don't charge stamp duty, there's IHT, inheritance tax exemption, and all these benefits. But a lot of my friends turn around and say, but the stock price is 10% or 15 or 20% wide. Why am I going to save 0.5% stamp duty when I can't even trade the stock? And why am I going to give that away? We want to make it a better place for the retail investor. And there's no doubt that if you get that connectivity right, you narrow spreads, you get competing market makers, then actually you get more liquidity, and that is better for the retail market. And again, you're protecting the retail investors and the longer term investors with the short selling, because it's all about, we want investors to invest for the long term, but we also want investors to be able to make money. Now, as an exchange, it's not our responsibility. We can't guarantee that stocks are always going to go up, but we do want to make quite certain that everything is fair, it is equal, and it's transparent, regardless of whether you're an institution or whether you're a qualified investor or a retail investor.
I'm sure that will be music to a lot of investors' ears. It's really good to hear that, and you say it so passionately as well. So it's clearly something that you feel very strongly about.
You're very passionate about this business.
Good, good. Can I ask you, Alasdair, what makes you different from the main or AIM market? What's your USP?
I think we sort of said that a little bit about that in the presentation, that here we don't want to just do AIM or the standard market cheaper. We do want to differentiate ourselves. And we do think that proportionality and that appropriateness is a key element of change. We think markets have moved. As I mentioned, the paradigm has shifted, and we've got to be building an exchange that is much more suitable. It's fit for purpose for today's market and not for yesterday's market. So I think we've got enough things that truly differentiate us, which is why I think we've got such a good sales funnel, a sales funnel at the moment, or pipeline of new companies wanting to come and get quoted and IPO on the Aquis Stock Exchange.
Okay, good. And what is the plan for growth then to increase investment and boost liquidity?
Well, clearly, liquidity is essential, and like all these things, if you look back at the Industrial Revolution, there were still people who believed in blacksmiths after the combustion engine had been built. We have doubting Thomases, of course we do, and we need to convince them and show them, and we will do that over time by educating people, by providing the data, showing the performance of some of these stocks. The retail demand is clearly there. You go and ask people, they want to invest in growth stocks and new economy stocks, and we're here to provide that function. Okay.
Now, you mentioned about raising standards with regards to regulation. I wonder if you can expand on what you mean by this. When you hear regulation, that kind of has connotations of putting up barriers.
I think there's two things there. Standards is one thing. We've got to maintain high standards. That is the job of an exchange. I mentioned it, this transparency, this comfort that you're going to an exchange, you're going to a stock, and it is fair and equal for everybody. The regulation piece is interesting because regulation, people shouldn't be feared of regulation. The purpose here, and we are a recognized investment exchange, the only one outside of the London Stock Exchange which is allowed to IPO companies. And we are therefore a regulator, and therefore we create the regulations for our own market. What is important is to make regulations that are simple, easy to understand, build processes that are simple and easy for people to use. So as long as they are proportionate and as long as they are appropriate for the size of the company. We don't want a regulation for a £8 million market cap business that is suitable for HSBC. It doesn't make any sense to do that. It is totally disproportionate. And unfortunately, in today's markets, that is very much the case. And it puts an awful lot of companies from going public. And instead, they go to the private equity markets. And the problem with private equity markets is often you lose control. You don't get actually what the valuation is. You can't necessarily raise new money. And all these things, it is better to go to the public markets. And having a clear set of rules, which is what the regulation is all about, should make it better for people to come at an earlier stage to raise capital. And when they should do, giving the opportunity not to the private equity investors or the private equity house, but actually to the retail market, and the retail market through the asset management market. And that's what we're trying to achieve.
Okay, and on that point then, how do you plan to attract more listings and IPOs?
Well, I hope that many of your viewers will look at this and they will have heard the differences that we have. It's not about we're coming to do this cheaper. It is doing something which is right. And if you look at the number of companies that we've got coming on, as I said, we've got two. We've got all sorts of new businesses. We've got two on Friday this week. These are businesses that are e-commerce, e-education, e-sports. We've got music businesses. You've got engineering companies. You've got mining companies. And some of those you will say, well, they're old economy stocks, but actually many of them are not. Many of them are using disruptive technology in order to go and do something which is far more effective, or reducing carbon emissions. We've got some great businesses in the ESG sector. This Salnox is a fascinating business because it's all about climate change and reducing carbon emission through petrol and diesel engines. These to me are things that I think the generation that wants to invest now, they're really excited by that. And that's why they must have access, and they must have equal and fair access to these types of stocks.
Yes, okay, good. Now, there can also be, I think, a perception that it can be a little bit frustrating to be listed on Aquis. How liquid is the exchange and how can investors trade on it?
Well, let's bust that myth straight away. I mean, let's look at it in two ways. One is there are masses of institutions. We have a website, a page on our website that actually lists a whole load of asset managers, famous blue chip names who will invest on Aquis Stock Exchange stocks. In fact, I think people like Samarkand and NFT Investments, they were all well oversubscribed. NFT last week, they were looking to raise 10 million. They took 35 million and they had more money than that. A lot of that came from institutions. So we know the institutions will invest on Aquis Stock Exchange. There are a lot of people who have vested interests who will tell you that's not the case, but they have vested interests. They just need to phone up any one of these asset managers and they'll look at the shareholder register, they'll see they can. The retail market must have access, and it's really important. Now, I mentioned in the presentation, but there are firms out there, Hargreaves Lansdown. You can't electronically connect us today through Hargreaves Lansdown. My view is very simple, that in this digital age, you can move accounts incredibly quickly. If a broker doesn't connect to Aquis in a stock you want to trade, it will take you 10, 15 minutes to move to another broker and set up the account and come and trade that way. And that's the great thing about competition. And the people have this incredible power. When people start to move their accounts and do things, which I'm sure they will, because they will want to access these growth stocks, then all of a sudden the doubting Thomases start to change. And that's how we'll grow the business.
Okay. And on that point then, what broker platforms allow trading on Aquis, and when do you envisage that all UK main brokers will allow online instant orders to be filled?
Well, as I mentioned, Hargreaves Lansdown is probably the one. Halifax is another who don't. It's easier to mention the ones that don't. All the others today, the Jarvis, Pello Capital, the Barclays, the Interactives, the AJ Bells, they all do. It's been a lot of hard work, and we've had to show what we're doing and why the model will work. And they have now all signed up. You can get electronic access. Can the performances improve? Absolutely. We want to get more data out there. We want to get more information out there. We want to get more quantitative research out there to investors so they get to see more, greater transparency on the companies that they're trading. But yes, it is absolutely essential that we get the retail and all the institutions involved in us. And I firmly believe we will.
Okay. Now, from my point of view, I'm also a private investor. And if I want to buy a stock, it doesn't really matter to me where the stock is traded, as long as it's easy and a seamless transaction. So is or will the process of trading be as simple as typing in the stock ticker and executing the trade like normal?
Well, the answer is within many of the brokers today, it is. With some of the brokers, it's a little less efficient than I would like to see, but I think as we grow, that will change. And it has always been my belief, and the whole reason why I founded the business back 9 years ago in the large cap exchange space rather than just the primary market, was this belief that in a number of years' time, everybody in the world will be able to trade any asset class they like at any point in time on their smartphone as they're traveling. And that will be done for $1 or a couple of dollars or £1 or whatever it is per month under some form of subscription basis. That is how we completely revolutionize this industry. That's how we modernize the capital markets. And that, at a time post-Brexit, is why I think companies like us can be part of the change for the great innovation that is required. We all know that monopolies don't innovate, and why should they? And what is needed, I think, in the national exchange space around the world is strong competition. And that's exactly what we intend to give them.
Good. Again, strong words there from you, Alasdair. It's good to hear. I wonder if we can just pick up on a couple of case studies. You mentioned in the presentation KR1. It's a great case study, a great success story. But what was it, do you think, that caused it to be so successful?
Well, I think, here is a company that invests in blockchain. And blockchain is a part of the cryptocurrency world. And you've got to remember, whether you believe in coins, tokens, the cryptocurrencies themselves, the fundamental settlement process is this distributed ledger technology. And I think many of us are great believers in the long-term benefits of distributed ledger technology and the blockchain. Let's look at it just in the equities market. Today, if you go to a registrar, it can take you weeks, if not months, to get up to date who are the shareholders of a particular company. But under a blockchain environment, you can get that in seconds. And you not only get who is the owner now, you'll get the history of who the owners were. Now, when you look at all that extra information that you're getting, I cannot believe that in 10 years' time, we will have a system to settle equities the way we do today. And I think when people look at this, they look at companies like KR1, and we've got other companies that are just coming on board in the next few weeks. In fact, one, I think Pluto Digital Assets was one which announced very, very recently that they're coming to the market or looking to come to the market. They're also, investors in blockchain. And you've got to think that the use of this settlement process is so useful in not just equity space, but in all sorts of industries. And therefore, it's the fundamental building block of the crypto and the digital world.
Okay. And another case study that I found when I was doing some research on Aquis ahead of this recording today was Chapel Down Wines. So that's another company listed on Aquis. But it looks like holding shares here can actually give additional benefits. So is this a model that Aquis will replicate across more listings, as really this could be a great bonus for both institutions and investors?
Well, it's not a model that the exchange should necessarily initiate. It's not a model that is new, but it's certainly one that I support. I know that if you buy shares, a certain number of shares in Chapel Down, you get a discount on their wines. I think that's a tremendous offer to have, and obviously people take it up. Maybe not enough people know about that, but it's not unusual. I mean, if you look across our market, Newbury Racecourse has offers. We have Daniel Thwaites, Adnams, Shepherd Neame. I think each of those do offer And you just have to check on their websites and see exactly what the offers are, the bonus of owning so many shares. And I'm actually surprised, and partly because I think historically, when these companies were on the predecessor of the Aquis Stock Exchange, they didn't really have the retail investors being able to trade. Now we've added that retail element to the marketplace. I think more and more of your viewers will look at this, look at the benefits, and hopefully go out there and buy some of the shares in where they feel it's the right thing to invest.
Yes, long gone are the days when you used to have to use teletext to participate in trading in the stock market. Everyone today can be a private investor. It's very easy with all the platforms and the information that is available. And Aquis Exchange, they're doing a very good job to enable retail investors to participate the way they are. So, Alasdair Haynes, the CEO and founder of Aquis Exchange PLC, thank you very much.
Thank you very much indeed. It was great fun.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.